moving averages. Now, moving averages are moving averages are supposed to be a point where they get you into a trend following position. Now, my experience with moving averages is this: by the time the moving averages have crossed, you've missed the majority of the move anyway. So what you have to do with the moving averages is try and anticipate what they're going to do. So we know about the euro. Let's get up a euro chart. You can see here where you've got the moving averages. Okay, I use a 9, 21, 55 day moving average, and I use that same period of moving averages for whatever time frame chart I'm looking at, be it a 60 minute, a 240 minute, monthly and or weekly. So you can anticipate these. Now if you look, you know, you not only got not a great key reversal in the euro, but you did definitely get a reversal day, and what's the fourth MA? 200. It's the 200 day I'm looking at as well. But if you can see, you had this key reversal day. Now, once the price had gone through that moving average and closed below that moving average, and you saw, albeit by look, 2 ticks of a reversal day, you can sell short as soon as it passes and closes below the moving average. If you look here at these, they're not even crossed yet. They haven't even crossed. If I take them off, oh hello, what was that? If I take them off and put them back on, you can see where, you know, the standard laws, I suppose, of using moving averages is that when they cross, you want to be in it for a trend following trade. Well look, when a price breaks through 1, just go with it, and obviously your second signal is when it broke through 2. I think you would have been buying them back at the 55 and the 200 day moving averages, and possibly even going long. But if you see, once this day, which is today, broke below these levels, you're short again. So you use moving averages as support and resistance. They work far better as support and resistance as opposed to how they should technically be working. And you can see quite nicely that it would have kept you short of the euro, you know, which is what we like to see. Now, it isn't only on a daily chart that this happens. You can go across any time frame. I'll just take these retracements off because they're not. So if I squiggle that chart up a little bit, okay. Now don't forget you're going with the hourly as well. I'm going to going with the hourly as well. You can see there where that was not only a key reversal day, it was a huge spike lower, and it went through all 3 moving averages. So in that case, using a very short-term chart, it would have got you short anyway. There it crossed, giving you another sell signal. If you look at where it crossed back then, you can see that the price action really didn't stay or break above any good resistance levels. And the other thing to note is that very quickly on the hourly chart, it came back day. I use the simple one, Boyke. I do look at the exponential, but I only look at the exponential for confirmation if I'm looking at a particular market that I want to trade quite a bit in. So for me, I use the simple. It's always worked for me, so There's so many moving averages out there now, it's quite scary. Now look, I've put a little trend line on coming from somewhere. Oh. I know where that one's coming from. Now, I drew that trend line quite a while ago, and it's still there. Okay, so we know it's alright, that's just interesting for me. So, let's see how the moving averages worked. We saw them cross, keep you in a trade. We had a double top. We had a key reversal. The averages were showing you to stay short. Little blip here. Down we come again. Might have got caught out there, but look, it didn't go above that resistance there, and it didn't break above this moving average. These did on the hourly, but again, we already knew by that time that 131.50 is good resistance, so you close your eyes, and if you were going to take a trade on there, you on a long basis, playing it from a long position, very, very quickly, it got you out. You was out any level below this point here. So the maximum you would have lost would have been like 18 pips. But for 18 pips, you would have actually stayed in the market. As you can see, it just clipped that one there, didn't take that one there, kept you short, and down we've come. Now, not only do they keep you in a trending market, when a market is going sideways, you can actually use them as excellent support and resistance levels. They don't have to be used as when they cross, sell it, or when they cross on the downside, buy it. The market action has to be right for that particular scenario to play out. Amit, what do you want me to repeat? Can I show you an example of a ranging market? Yeah. All of it. No, sadly I can't repeat all of it because my heart, won't let me. Okay. Let's try and find you a ranging market. To be honest, the last few weeks, we haven't actually seen any ranging markets. They've all been sort of trending. Sorry, Ray, you'll have to get on with that one again because I'm not getting the questions as I should. So if Ray, you'd repeat that question again, please. How about gold short term? Okay, perfect. Brian, was you there? You had a question I can't answer because I can't see the question anymore. Do you buy and sell off the touch of an MA? No, you really want to see it break through. If you have, I'm sorry, this is virtually impossible to do this because I can't find out. I can't go back and see your questions. You're appearing on my shared monitor, sort of like a little drop-down market, and I can't find you. Oh, hang on. Gotcha. Done it. Yes, you use them as support and resistance in ranging markets. Now I'm going to try and find you a ranging market. I'm not promising a great deal because we haven't actually had ranging markets for quite some time. Here we are. When she says that, out comes the euro sterling. Okay. Now, for you it probably doesn't look like it's ranging. For me, it does. Oh no, it don't there, does it? Daily. Okay. Here we have a ranging market, albeit in quite a large range. 84 to 86. I'm not sure that that's... yeah, I've got euro sterling. It's not really a ranging market for the retail market, but it would be for professional traders and banks because you can see that it's just going 84, 86, 84, 86. Now you can use your 3 stroke 4, it's too far. You can use your 3 moving averages as support and resistance. You see where it caps the top there. You see where it capped the bottom there. This bit's a bit of a mess, really. So if you find they're a bit of a mess, you go in and you look for something else that would confirm whatever it is you want to trade. Dollar yen, there you go. There's a ranging market that's looking like it's topped. We haven't really had ranging markets in the last few months, really. So, but just take my word that you can use these, buy and sell, or if not buy and sell, to actually keep you in or out of a trade. Now somebody's asked me about gold. Somebody asked me about gold, short term. Okay. Well, see, these are the charts I work off of, so you have to excuse me. I do put a lot of lines on charts that I think are going to move. So, we've broken through our pivot point, resistance analysis today, our Fibonacci retracement. So we now have to put some more on. If you look at the moving averages there, you can see they're very, very tight. But this one is a smoother one, and it just shows that it's going to keep going lower. And if you look, if I switch that out, you can see there that the moving average actually kept you short, although we had a bit of a mix up here where it did just sort of go flat. But if you look, all our indicators at that stage were a bit flat anyway. But looking to top, you can see that flat, those flat moving averages coincided with these topping short-term stochastics. And also, which I haven't mentioned to you before, was the MACD. Now it's virtually the same as a stochastic, but as you can see, it is a lagging indicator, whereas your stochastics are a leading indicator. So we know we've got a base here on gold, alright, and this is where we feel that the traders will drive this market to. Now what would confirm strength is going back above this moving average here, which as you can see comes in at 1245. Now if you go above 1240, I'm sure that's 8, yeah, if you go above 1248, you can see that would then see strength coming back into the market. Now what you've got a conflict here is you've got your moving averages showing to go lower, you've got your MACD flat, our stochastics are trading higher. So that's something to look out in gold. If you wanted to buy gold, I think this level, which is 24, anything 24 to 20 is going to be the place where you'd want to buy gold in anticipation of it trading higher and breaking above these moving averages. And even if we went now, you see that coincides with your 38.2% retracement. But even if we come back here, which is 1263, and even this bit here, which is 1272, you'd be breaking that moving average, but it's still within a downtrend, and that then will move back up here, enabling you to resell again. Yes, gold is diving, but it's dived before, Ray. Okay? We're not tanking out of sight yet. We're only going to tank out of sight if you just bear with me, ignore all my, let's put it into perspective. This is where we've come from on gold. This is where we went to on gold. I don't think the moving averages really make a lot of difference here, but they do. You see here, even on the weekly chart, okay, they kept you short of gold. Can you see that average? Oh, say yes. Yay. Okay, so even on a weekly chart, from this point and breaking through there, told you that gold was going lower. Now, you had confirmation because it broke out of this pattern here. It was looking extremely overdone, okay, but it diversed. It wasn't, those was higher, that was lower. You had diversification. Configuration, yes, Mel, 1033. What makes me think a stochastic is a leading indicator? I don't know. I've known it has been for so long. I can't think why. It just is. You know, that's the way it is. You can see, if you actually look at them, and you can see the market, even when it's going lower, if you see these stochastics change, you start to cover whatever position you have, because it will then turn and go the other way. Yeah, crystal ball. It probably is a crystal ball, and it's probably because I've done it for so long. You know, it's not quite. Yeah, Peter, it is based on what happened before. So we do look at, but I mean, I don't look at what it's done before. I look at what it's doing now. Stochastics are in the present. So, you know, at the moment you can see our stochastics in the weekly chart are like still pointing lower, and have been lower for the last X amount of weeks, and we've seen gold come from here to here. So you put less emphasis on the weekly ones unless you see a turn in them. Okay? If you see a turn in the stochastics, something is wrong. Now, we've done that on a 60-minute chart, so now we'll have a look at a 240-minute chart on gold, because gold is obviously a bit flavour of the monthlish at the moment. We'll put some more retracements on there. Okay. You cannot tell the future, you can get divergences from them. Well, listen, look, not everybody. No, you cannot tell the future. You're absolutely right. But a good chartist and a good analyst and a good trader that uses every piece of knowledge that he gets from the market, it's not the telling the future. It is a psychological thing. You know, everybody else is looking at the same thing. So therefore, you can anticipate that the market is going to turn. That's how you do, how you trade. You know, it's not, you're not an analyst just going out there and saying this, that and the other. I mean, I don't do analysis for any other reason than to trade the market and to get people to trade the market. Yes, but you would different traders trade different ways. If you're a scalper on a 1 minute bar chart, this isn't going to help you. Hang on though, I say it's not going to help you. I don't know what this chart is going to look like, but hey. Well, how about that then? Look. See, charts never fail to baffle me. There's your change in stochastics. There. See it? See them cross? There. That was the price. And that was that bar there. And from that bar, the price has gone up $3. So if you are a very short-term trader, your moving averages are up. You're probably going to go up to see this level here. So yeah, you can do that. You can be in and out of these markets all day long if you want to. But I find if you go slightly that bit farther out, you're going to get, you're going to get more profit within a trade. Confluences, okay, run that by me, Boykie. What's a confluence? So please don't, please remember you are talking to a London person here. Boykie? Oh, mix all things. Yes, I do. I mean, because don't forget, if it all mixes, if it all points to the same thing, for example, if your stochastics turn bullish, your moving averages turn bullish, your chart price looks like it's making a base pattern, sure, what do I call it? I call it, when they all come together really, everything converging, I say. That's a pub crawl. Yeah, what happens is if you can see all the indicators that you look at all showing you the same thing, it's got to give you more confidence to go into that trade. And that's what you're looking for. You're looking... Victor word. Don't you? It is a Victor word, bless him. Now, of course, if everything's showing you that the market is going to turn, except the price. This is where you've got to be very, very careful. If the market is going down, but everything else shows you that it's about to turn, be careful. If you're short, cover it. You can always go back into the market, selling or buying, if these indicators don't play out. But I'm telling you now, I'm telling you that 9 times out of 10, when everything is like, if you're an astrologer and you're looking up at the sky and then, whatever, or astronomer and astrologer, okay, and all the planets converge, you know that something's going to happen. And that's the sort of thing I do. I mean, you're not in and out of trades all day long, every day, because at the end of the week, you're probably going to be slightly up, slightly down, or flat, and it's going to be a bit of a problem. That if you can learn how to just sit back from the market and look at what indicators the rest of the trading fraternity is looking at, then you have as good a chance as anybody of making the money that anybody else would make. Of course it does. But you don't want to make brokers happy, You want to make you happy. That's the difference. I go back to the life floor. When they used to scalp, great. I mean, they give liquidity to the market. High frequency traders give liquidity to this market. The algos give liquidity to the foreign exchange market. Of course, those were the days. Of course, anything that gives liquidity to a market is very, very good. But what you should do is try and be one step ahead. And I think that's the plan, is to be one step ahead. Look, when they turned here, our price was a lot lower, and that's even on a 60-minute chart. So at that point, you did know that the market was going to go up, and even if you're scalping for 10 pips, $3, $9, whatever many dollars you want to take out of the market, be aware of these. Look at the MACD. Hasn't turned. It hasn't turned. It will only turn when that blue line crosses that red line. Then you will get a buy signal. Well, what's the point? You already had it from the stochastics down here. You already had it when it broke through that first moving average and went to the second moving average. Do you see what I'm saying? Although we crossed here to go lower and it's kept you in, this is how it's held support and resistance levels. Now, can anybody see what I'm trying to say here? Oh. Yes. Great. Now, has anybody else got any questions? Because I think we're actually going to run out of time soon due to my inability to get this up and running. So if anybody would like to ask me about anything else for the next, I don't know, 5 to 10 minutes, what is the entry? No, definitely not. You have to trade when the stochastics point higher. For example, you see here, all the way down here, short, 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 short. Day crossed. You cover your shorts there as they cross, and you go along there. Okay? That's what you do. That's how you use these in conjunction with your moving averages. It is a minefield out there, but if you look at it, if over these sessions you can go GP few more mins. You probably can. Oh, I can go for a few more mins. Oh, thanks. Thank you very much. As a Londoner, do you trade the London Open? No, not really. I think the best time to trade either as Asia and London Open, but you know, that's a lot earlier than people think. Not too early for me. I'm up at 5 doing your charts. I'm still there. So it's 5 o'clock. It's 4 o'clock in the morning your time. No, I wished it was. I think that one of the best times to trade is when London closes and New York takes it over. I think in that period of time, the 5 to 7 area is quite one of the largest sort of trading ranges we get through the day. So really, I could get up very late, do the charts about 4 o'clock, and you'd all be fine, or anybody, all my customers would be fine. So now, yes, so now what, Ian? Hello? Is the right time. Yeah, it is. It is the right time. You know, it's 4:45 my time, 4:45 your time. So, New York, America as a whole, I won't say New York, I say America as a whole, they just like to run up and chase the stops. It's no different to what they'd done years and years ago. We always had this, even when we worked on the floor. We always had this London closing and America trying to ramp the prices. Even on the floor, even when we went back to the office and traded back at the office, it was always that. And, you know, there was always a 24-hour market in foreign exchange. Nothing's changed, nothing's, you know, altered. It's just that the physical traders are going home in London and physical traders are in from the States. Same as when we don't really talk about the future so much because they trade all night as well. Yeah, we did have that. I have to tell you, Boyke, I was one of the first people on the floor back in 1982, 83 to actually look at charts. I promise you, no one looked at them. But as it progressed, as people got better knowledge, and you had these technical trading desks start up. I mean, personally, I did mine. I started up 3 technical trading rooms in my career. One was at Midland Bank. I helped Nicole and Mariella start up a technical trading desk. I had started up a technical trading desk at Nomura Bank before Nomura International became 4,000 people. There was only 8 of us that were in Nomura Bank, and we all come from Midland. I then left Nomura Bank, retired, came back into the market, and I thought, yeah, I did see the future. I came back into the market and started up Credit Suisse. I don't use EMA because I've always used the smooth druv. So if I want to look at it every now and again, I just change it. I just go, well, let's have a look. Modify. Where are you? And there you go. But you can see, you know, they're not that much different. That one's a bit more different, but really, I just prefer the simple one. You've got loads of them now. And also, it's what you're trained on, isn't it? What you train yourself to look on. You know, it's what you train yourself to look on. Right, I don't look at candlestick charts, MRC. I have to, but I appreciate what you're saying. I don't look at candlestick charts because I worked and set up a technical desk at Nomura International, Nomura Bank, and I have to tell you, I had candlestick charts rubbed, thrust down my throat, which is not one of the things you want thrust down your throat as a woman, but I'm just saying, you had it thrust down your throat, and for me, their technical person that was looking at candlestick charts actually didn't have any better idea than what I did. I just kept it simple. I got the dealers into a trade. I traded myself extensively on these desks, and we made money. It was as simple as that. With swinging dojis, hanging tammers, golden star, crossing, you know, there are too many things. You're absolutely right, Mel. They are patterns with just stupid names. You can look at a bar chart, candlestick, they do confuse. Absolutely, they really do confuse the issue, which is quite sad. As I say, I can only say this because I worked in a Japanese bank for 4 years, and I saw nothing that actually made me want to rush out and candles burn best. They probably do. But I saw nothing that wanted me going to rush out to change my charts to a candlestick chart. When I send my charts out during the day, well, first thing in the morning, I actually do put candlestick charts on the report, and the reason I do that is because traders can visually see whether it's a green day or a blue day. See, that doesn't bother me. If I look at a chart, I look at the little thing over here, there, the close, the close, so I can see it's gone up, up, up. I don't need a green candle to show me that, but newer traders might well need that sort of visual contact. Now, that's great as long as they only use it for visual purposes. Don't use it for trading off a dingly doji. They're not there. They're really not there. I think candlestick analysis has more names to patterns than I've ever seen in my whole entire life. And I say, working at Nomura Bank for 4 years didn't make us, or me, didn't make me want to rush out and ever use candlestick analysis ever again. Is your course still there, Carol? What course? You can actually have a look at my course. I'm sure it's on old webinars that I've done for FX Street. No, the one Melanie took is the only one I've got. I guard it with my life. When I get the time, I'm going to write another one, because obviously this was written a very long time ago, and markets have changed, but the basic strategy of a market hasn't changed. I think it was 1997, Mel. Alright, not 87. Do you still have a training course for beginners? Yeah, I do. It's actually on the FX archive webinar. Okay. But if you want it, Druv, send me an email and I'll send it over to you and you can have a look at it. Okay. Very basic, but you're more than welcome to have it. Is there anything else anybody wants to ask me about moving averages? Email. Email. It's at the bottom of my report. If you go onto charmacharts.com, my email address is there. Okay. Well, thank you very much, everybody, and I'll see you next month. Okay. Have a great month. Bye, guys.